Good morning, everyone. My name is Michael Naidrich, and I am the co-CEO of AmeriVet Securities. I am joined by my partner, everything Fed Rates Liquidity, CFA, Gregory Faranello. Good morning, Greggy. How are you?
Good morning, Michael.
Hard to believe, but here we are. It's the end of 2025. This will be our last preview of the year, and we got a lot to discuss. So, let's get right into it. I guess I'm going to get into the why, right? Meaning, there's a lot of things going on. Data's been sporadic with the government shutdown. I think between our last meeting and this meeting, there was actually some contentious debate about no cut versus a quarter. I think we're trending towards a quarter per our conversation earlier this morning at the team. What are you thinking?
Yeah, so the committee is, they're certainly divided, I think, at this point, and rightly so. My view is they skew a little bit more toward the employment side of the equation than inflation right now. We're not we're not terribly concerned about inflation. I mean, we're running sort of 2.5 to 3%. I think the Fed is okay with that. If you look at the core of the committee right now, I think they want to come down another 25 basis points, but beyond that, it's not really clear to me where we go from here in terms of how much lower they can go.
Yeah, it's going to be interesting, and maybe I'll go a little bit out of order based off that. I think there's a feeling out there, I think Trump has tipped that the NEC director Hassett will be his pick moving forward in May. I think that's obviously a dovish choice relative to maybe some of the other candidates who are out there. So maybe explain to the viewers how that plays in for the rest of Powell's term versus, Hassett potentially coming in May.
Well, I think Chair Powell he's a complete pro for sure. And I've always felt that way. And, we've written to our clients over time that Chair Powell is still the chair until otherwise indicated. Kevin Hassett is an extremely bright man. I think if the president does pick him, it would be a great choice. My choice has been Fed Governor Waller because I think he's got a little bit more connectivity to the committee in and of itself. And I think that's important. And there are some questions in terms of someone from the administration coming in to sit within the board of governors and what that means in terms of the Fed. So um, we we like Kevin Hassett a lot. I think it's a good choice. But the one thing that we've written about is ultimately the economy and will dictate where rates go. It doesn't matter who the Fed chair is. It's a committee. They need to talk amongst themselves and where the economy goes. And the economy, to me, right now seems pretty good, and that's why you're seeing 10-year yields at 4.15. So I don't think it really matters who the Fed chair is right now. I think it's more structural over time in terms of what they do with the institution. But with regard to official interest rates, it's going to be a matter of where the economy is at.
Yeah, that makes sense. And I guess I want to get back to a little bit about, the rates continuing to move higher. And I know the 10 year is usually the biggest focus, right? So I think you said it's at 4.15. Can you just explain to our viewers why you think this continues to happen and where you see it moving forward?
So if you look at core inflation, we're running 2.5 to 3%. I think Trump 1.0, we were running, much different dynamic. So on the supply side right now, if you look at where core inflation is at, if you look at where growth is at, there's nothing inappropriate with this rate structure right now. I know the administration is frustrated and they want rates lower. They will get rates lower over time, but the market is saying you have to prove that to us in terms of, more so on the inflation side. And they're making, I I think they're doing a good job, but it's hard for me to look at a 4 0.15 10-year and think, everything considered, that it's inappropriate right now.
Yeah, is there any chance, but handicap this a little bit, is there any chance they go 50 in this meeting?
No.
Zero. Is there any chance they go no cut in this meeting?
No.
Okay, so it's baked in at a quarter, it's priced in, and let's move on to the presser. Is that what we're saying here, Greggy?
Yeah, we're not going 50. We're not going nothing.
Okay.
So yeah, they're going to go 25. I mean, the bigger question is, at the end of the day, they're leaning more, like I said, on the employment side of the equation. The fact of the matter is that 25 basis points is not going to make a difference to the employment market right now. It's really about policy. I believe, and you and I have talked about this all year, I still believe that we are being driven clearly out of Washington, out of policy. And it's, look, it's tough for the Fed. It's tough for Powell too. I mean, it's, there's a lot of criticism to be, drawn around, but when I look at the rate structure right now, I don't really see anything terribly inappropriate with it.
So let's talk about markets for a second, if you don't mind. It's interesting. The markets are, sort of near highs. I know tech's come off a little bit here in the last couple of weeks, last few weeks. But it amazes me the resilience of the marketplace. And there's been some hiccups with Bitcoin, and that's actually rallied back a little bit over 90,000. And I'm just looking at the overall market, and the size of the M&A is staggering, right? I mean,
Mm.
and it's coming across all sectors now. You got IBM, you got stuff going on in the media space. Biotech has been there basically all year with these massive mergers. The term I keep using internally is it's like monopoly money with some of the sizes of these deals, right? And I guess it's all relative to time and stuff. But do you see this activity? And I know it's a big belief of the Trump administration that there would be this type of activity. Is this just finally a year into his administration, give or take, 30 days here of what was expected under the administration?
I think so. And my feeling has been 2026 is going to be a great year in general. I really feel that. And that I study, history and
Yeah.
time and places, administrations. This was clearly a year of change. What I see coming down in 2026, and look, I'm not alone. I've had a lot of people reach out to me and say, they're seeing things that may not make them very comfortable, but I think 2026 is going to be a great year in general.
Yeah,
This activity, I think, is going to continue, and I think it's good in general.
yeah, I think you're right, and I'm always cautiously optimistic. Maybe that's just the trader training in me. But if you look at the tea leaves, I think two of the money center banks have debt issuances up. One has it at 15%, another has 25%. I think we were talking offline, you and I, about you have to dig into that number a little bit deeper in that, some of these hyperscalers and some of these M&A things are going to skew the notional number. So I'm not sure that the overall deal flow will be more, but I think the notional number will definitely be up on the relative. And even looking at the ECM markets, right? You're talking about some potential monster deals out there in the AI space for IPOs. You got Fannie and Freddie that is, out there on the IPOs. You have some of the Pershing Squares talking about some unique structures that are, interesting deals. I think 2026, if things can stay on track, can be a monster year for the capital markets.
I agree completely. It's
Yeah,
it's going it's going to be. I'm gonna
yeah,
I'm gonna I'm gonna put my trader hat on a little bit
yeah,
here as well. I think 2026 is going to be a great year. I think the overall, it's interesting. If you go back to April and you look at some of the changes that the administration made, I personally think this president has tried to adapt along the way in terms of, where things are at, where the markets are at in general. It's not all about the markets, we know that, but if you look at the overall fundamentals of what is being put in place, and the regulatory side, Michael, has not even kicked in yet.
Right.
Um, it's 2026 is going to be a great year.
Yeah, I think I'm in full agreement with that. And I think, to your point on the president, he's made some interesting adaptations to his tariffs. I think I read this weekend there's going to be several $billion in former aid to help them with their costs. So I think whether it's Secretary Bessent or his inner circle, I think they do a pretty good job of, making sure he's being adaptive. Look, here we are, another year of you and I doing this. I don't even know how many years it is now. It's been several. I always enjoy it, as you know. There's a lot of moving parts. I think what I've learned the most from you is, the meeting is going to be what the meeting is, but the policy and the presser and what they're thinking moving forward really becomes the most important thing because that's what's going to dictate what the future looks like. So I appreciate your time. I appreciate your education to me and our clients. And if anyone wants to talk to Greg, we just came back from the Midwest and Texas and California, so we've been out on the road. A lot of questions out there. Please don't hesitate to ask. And Greggy, I wish you some nice rest here. Congratulations to your son on the U
On
for
the
not
U,
not
yeah,
only getting into the playoffs, but graduating, which is awesome. And just good stuff. And get some rest, buddy. And we look forward to talking to you in January of 2026.
sounds good. Thank you,
Yes, sir.
Michael.